Hi, welcome to Juan Finance, and in this video we're going to cover the top performing bond funds as of second quarter 2021. So here are the main features of the bond funds. We have medium risk, medium potential return, and usually for moderate investors. And the ideal investment horizon would really depend on the tenor of the bonds. So for example, 1 to 3 years for intermediate funds, and we have 3 to 5 years for medium-term funds, and 5 years and up for long-term funds or long-term bond funds. So the usual drill, we have the peso currency, and then we discuss the benchmark, and then next we move to dollar currency and also the benchmark before going to funds. So here you're looking at the government yield curve of the Philippines. If you're going to look at here, the benchmark would really depend on the tenor of the average tenor or average duration of the bond funds that you're holding. So in our example a while ago, that's 1 to 3 years. You have 3 to 5 years or even 5 years and up. So you're going to look at these data points here. But nevertheless, let's try to look at here the 10-year, which is the usual benchmark for credit. Here, you're looking at 6 months ago, that's around 2.98%, but as of July 6th, that's around 3.81%. So if you're going to look at that's the blue line, okay, above the value way back 6 months ago, so 2.9 versus the 3.8. So there's an uptick in yield. So I think it's almost the same here. So if you learn that the effect of the higher interest rate, okay, would reduce bond prices. So that's why if you're going to compare the performance of bond funds, let's say third quarter or fourth quarter 2020, they might be performing well and better compared to the bond funds now because of this uptick in yield. Okay, so here are our peso bond funds as of July or second quarter 2021, 1 year performance, historical net of taxes and fees. On top, we have here ATRAM total return peso. That's around 2.88%, followed by Union Bank 1.81%. PhilAm Managed Income Fund on the third place, 1.75%. Fourth place, we have 1.73% from ALF and Peso Bond Fund. And lastly, we have 1.09 from Union Bank Philippine tax exempt fixed income. So what if you have 100,000 and you invested in among or any of these funds for about a year? So ATRAM total return peso bond could have given you 2,880. Union Bank 1,810. We have PhilAm Manage 1,750, and for ALFM 1,730, 1,090 for Union Bank. So let's try to explore ATRAM. Here you're looking at the report as of March. So roughly it's first quarter. I really have difficulties in looking at downloading the most recent one, but this one is as of March. So if you're going to look at this fund, was also featured in one of my videos or many of my videos about Gcash. So it's the most affordable UITF investment that you can avail from the market nowadays. So minimum investment is 50, additional is also 50, minimum holding period is none. So notice that if you're dealing with UITFs, maybe the minimum balance in average or minimum investment requirement in average is about 10,000. For mutual funds, maybe the average is about 5,000. But this one, it's way below. That's 50. It's among the most affordable investment that you can find in the market. So trust fee here is 1.09, so we expect this one to be higher compared to money market funds because it's more harder to manage. So the higher the asset class, the more expensive is the trust fee. So money market funds usually below 0.5%. Now trust fee here for a bond fund is 1.09 or at least 1%. So here you're looking at the performance of the fund, and we don't have the benchmark here, but this is clearly the NAVPU. So we have here the volatility last March 2020 during the peak of the lockdowns Here in the Philippines, if you're going to look at here, the 1-year performance is 1.90, but and the benchmark is actually still at 0.28%. So still outperforming the benchmark. So we can still say that it's really good in terms of its objective in outperforming the benchmark. So you're looking at here. This is actually the some of the fund facts statistics. But if you're going to look at here, these are the fund NAV let's say from 2021 February 26. That's 125.87, and as of May, that's around 126.98 percent. So the composition or the allocation of the bond here, we can see that it's 88%. So that's very huge. 88% allocation accounted for by government securities. So mostly here are government securities, particularly this one, fixed rate treasury note with massive 64% allocation of the fund, followed by the same government security around 24%. The rest are, although they are top holdings, but if you're going to look at the allocation, is less than at least 1 or less than 1%. So let's move to dollar currency. Here we have the yield curve of the US government securities. You're looking at here 6 months ago 1.039, and as of July 6 1.4, so almost the same story in the Philippines. We have an uptick, so we already know that if we have a rising interest rate, that would drag the bond prices a bit lower. Okay, so let's try to look at here for our dollar bond funds. Coming on top, we have China Bank Dollar Fund, 6.09% for 1 year. BPI Invest followed on the second place with 4.03. Next, we have Philippine Equity Dollar, 3.95, Odyssey, 3.40, and Metro Dollar Asian from Metro Bank at 3.20%, net of taxes and fees. So here you're looking at a simulation. What if you have $10,000 and you invested in any of the funds, let's say for 1 year? For China Bank, that would have given you $609 for BPI Invest. That's around 403. Phil Equity 395, for Odyssey that's 340, and for Metro Dollar Asian that's around $320 for a year. Okay, let's try to explore China Bank Dollar Fund. The minimum investment is $500, and additional investment is at least $100. So I think this range of minimum investment and additional investment is actually within the average in terms of UITF in the country or in the industry. So minimum holding period is 30. So you may not wish to withdraw or redeem your investment within 30 calendar days because you will have a redemption fee. Here early redemption penalty, that's we have here 1.5 and 1.0%. Although the trust fee of this fund is way too low, that's 0.06%. Okay, so client suitability, moderate risk appetite, simply because it's a bond category, so it's no longer conservative, unlike money market. So clients who are willing to assume certain level of risk, because we have the volatility risk brought about by rising inflation and interest rate, and then an investment horizon of at least 1 year. So again, the investment horizon would really depend on the average tenor or duration of the bonds as its underlying asset. So here you're looking at a weighted average duration of 3.87 in years. That could be, let's say the average duration in years could be around 3 to 4 years. So that should be your recommended horizon if you're willing to hold this bond. Although the recommended holding period is only 30 days, but if you're going to look at here the weighted average duration, that's 3.87. So therefore, if you want to be immunized from these volatilities here, you should be holding or willing to hold this fund up to 4 years, at least 3 years to 4 years, based on the average duration here. That's the fact. And if you're going to look at the performance of the fund versus the benchmark, so again, the benchmark is 0.85%, basically because the policy rate of the US is still near 0%. And here, if you're going to look at 6.96%, clearly outperforming the benchmark because of the higher, interest rate expectation, both in the Philippines and in the US, due to the recovery from the pandemic. So here, if we're going to look at, we have here the dip from the pandemic lockdowns, March 2020, and we can see here that as early as August 2020, the fund, okay, the benchmark rather already recovered. Yeah, this dark line is actually the fund. So if you're going to look at the fund, actually recovered as early as August 2020, while the benchmark reached the pre-COVID level sometime around in still August 2020. So if you're going to look at here, before the COVID and now, it's relatively on an upward movement. Okay. So about the allocation, if you're going to look at here, with highest double-digit allocation, we have VLL. I'm not sure about this one, but we have here a deposit from other banks. That's 20% accounted for by that instrument, and the rest we have here sovereign bonds and ROPs from ROP from the Philippine government, Indonesian bond. This is from Mega World, AC Energy, and so on and so forth. So 51% is accounted for by US corporate bonds. So these are our sources. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.